Well, newly released travel data suggests Canadians are still staying away from the U.S., with Donald Trump's trade war leaving many of them making alternative travel plans.
Tourism in Las Vegas is in a big slump this summer, costing the city billions of dollars. Some are saying that could signal trouble ahead for the U.S. economy.
We are never going to be the 51st state of the United States. I've chosen not to spend money in a country that is being that belligerent about us.
Last year, Canadians made over 20 million visits to the U.S. and spent more than $20 billion here. But this year, many are not coming to America.
It's 2025, and something unusual is shaping up between Canada and the United States. Official data shows a sharp drop in the number of Canadians traveling south this year. For many tourism-dependent communities in the US, the sudden shortfall in Canadian visitors isn't just a seasonal hiccup, it is hitting livelihoods. Industry forecasts estimate that overall international visitor spending in the US could drop substantially in 2025. Some reports put the projected shortfall at roughly $5.7 billion compared with previous years. But what's driving these declines? Is it an organized boycott, economic pressures, changing traveler preferences, or simply a combination of many factors? That's what we explore today. Let's start with the facts. Data from 2025 shows that Canadian travel to the US has dropped significantly compared to the same periods last year. In the second quarter of 2025, Canadians made about 5.6 million trips to the US, a 21.6% drop from Q2 2024. The same report shows that Canadians spent $4.8 billion in the US during that quarter, a 14.9% decline year over year. In recent months, both road, car, travel and air travel from Canada to the US have shown double-digit declines. For instance, in one report, car travel dropped 35% and air travel 20% compared to the previous year. In a later period, Canadian visits to the US reportedly fell 35% by car and 27% by air compared to the same month in the previous year. These are substantial downward shifts, and they represent a long, continuous trend over several months, not just a one-off slump. Why does this matter? Because Canadian tourists have long been among the largest foreign visitor groups to the US, contributing significantly to hotel stays, retail, food services, leisure, and border town economies. Travel industry analysts suggest that even a 10% drop in Canadian inbound tourism could cost the US billions in lost spending, and jeopardize hundreds of thousands of jobs in hospitality and related sectors. With the declines we're seeing in 2025, far beyond 10%, some estimates project multi-billion-dollar losses for tourism-dependent regions. For many local economies, especially border towns and states heavily reliant on Canadian snowbirds, vacationers, and cross-border shoppers, this isn't just a slowing growth story. It's potentially a harsh contraction. So, what's behind this sharp decline in Canadian travel to the US? Analysts and public data point to a mix of overlapping factors: political climate and trade tensions. In 2025, the US political landscape, especially trade policies, tariff announcements, and rhetoric aimed at Canada, has created discomfort among many Canadians. For a segment of would-be travelers, that political tension has translated into a deliberate decision to stay away. According to some analysts, these developments have triggered what many call a travel boycott. Reports show that Canadians are choosing alternative vacation destinations, within Canada or overseas, instead of risking travel to the US. Economic pressure and currency exchange. The value of the Canadian dollar against the US dollar, combined with rising costs of accommodation, airfare, and general travel expenses, has made US vacations more expensive for Canadians. Many families and travelers cite financial pressure and cost of living concerns as reasons for skipping their usual US-bound holidays. Shifting travel preferences. Data from 2025 shows that as Canadian travel to the US declined, overall overseas travel by Canadians increased. In Q2 2025, while US-bound trips dropped 21.6%, Canadians took more trips abroad to destinations like Mexico, Europe, and Asia. This suggests a broader shift in travel behavior. Some Canadians aren't simply staying home, they're redirecting their travel to alternative destinations. Uncertainty and perception issues. Beyond hard costs and politics, there's a sense of unease among potential travelers. Some Canadians report feeling unwelcome or uneasy about visiting the US amid political rhetoric. Others are cautious about border hassles, changing regulations, or general instability. Psychology, perception, and trust can weigh heavily on travel decisions, especially when combined with real financial or logistical concerns. Here's where the story becomes complex. The term boycott implies a coordinated political or social action, people intentionally avoiding something as a form of protest. But the available data doesn't paint a picture of a single, organized movement. Instead, what appears is a convergence of economic, political, and personal factors influencing a broad group of travelers. While some Canadians may indeed be choosing not to travel to the US as a political statement, many others seem motivated by cost, value, convenience, or travel preferences. The drop in US-bound trips coincides with an increase in overseas vacations and domestic travel, a shift that goes beyond simple rejection. The human impact of this shift is already being felt, especially in US states and regions that historically relied on Canadian visitors. Hotels and motels have reported a drop in bookings and cancellations, particularly in states popular with Canadian snowbirds and vacationers. Local businesses, shops, restaurants, tour operators are seeing decreased foot traffic, especially in border towns and tourist-heavy areas. Seasonal workers and hospitality staff face cutbacks, shorter seasons, or reduced hours. Tax revenues from tourism, an important source for some municipalities, are threatened, potentially putting pressure on public services and local budgets. For many of these communities, the drop in Canadian visitors isn't a temporary slump. If the trend continues, the economic consequences could accumulate. Industry associations and tourism bureaus are sounding alarm bells. Some have revised their 2025 revenue forecasts downward. Others are scrambling to pivot, targeting alternative markets, offering incentives, and rebranding to attract non-Canadian visitors. At the same time, policymakers are under pressure. Local officials in border states have reportedly reached out to Canadian travel groups, urging dialogue and reassurance. Some state tourism campaigns have already begun marketing messages focused on safety, affordability, and hospitality, hoping to win back skeptical visitors. If broader factors, economic, political, social, continue depressing cross-border travel, long-term impacts could include permanent business closures, labor market disruption in tourism hotspots, and shifting demographics in travel-dependent towns. What we are witnessing in 2025 is more than just a dip in travel numbers. It's a reflection of shifting global dynamics, a reminder that tourism is fragile and deeply influenced by politics, economics, and human perception. For the US, the drop in Canadian visitors may be a wake-up call, a signal that relying on a single market can be risky. For Canada, changing travel patterns could reshape how people explore the world, shifting toward alternative destinations or more regional vacationing.